Nicholas Bornoz of Capital Link, and I'm delighted to welcome you to this one-on-one discussion on Sovcomflot. During these 3 days of our forum, every day we have a one-on-one discussion on a major industry participant, on a leading shipping company. And I am delighted that today we are going to have a deep down focus on Sovcomflot. Sovcomflot, as you all know, is one of the leading energy companies in the world. It is specializing in energy transportation across the whole chain, crude oil, petroleum products, liquefied gas, as well as the servicing of offshore oil and gas production. So it is really very fitting to have a discussion focusing across the whole operations. They have a number of initiatives, and Ted Jadick, the president, managing director and CEO of DNB Markets, our partner of today's event, and the conference chairman, is going to discuss with Nikolai Kolesnikov, the executive vice president and CFO of Sovcomflot. So thank you to both, and I hand the podium, so to speak, to you.
Terrific, thank you. Thank you, Nicholas. And Nikolai, I'd like to welcome you as well to the forum. It's great to see you again, and really appreciate your taking some time to speak with us. I think let's start with the headline from the kickoff panel of yesterday's session of the conference, where people were asked if it's all glitter and gold, which I think is an interesting question within the shipping context, but would be really happy to also get your take on that question and how you see things right now from your company's perspective.
Yeah, thank you, Ted. Good morning, good afternoon, ladies and gentlemen. Thank you, Nicholas, for the invitation to participate in this flagship event of Capital Link. Is it glitter and gold? Well, you know that we at Sovcomflot like to differentiate ourselves from the others. I'd say that we're definitely heavy metal, but maybe more with a steely shine than a golden glitter. And for good reasons. I think we need to be built of high tensile steel to crush the Arctic ice and operate in the extreme environments in the geographies where we do trade. And we need to be armor plated to withstand the hurricane force headwinds in the markets and the geopolitics. So probably less glitter, but steel nonetheless.
Well answered. Well answered. You know, from my vantage point, and I've known you for quite a while, and I've known the company for quite a while. You know, Sovcomflot to me is definitely a company in transition. In terms of its business platform, in terms of its financial position. You've moved heavily from your traditional conventional shipping base into what you describe as industrial shipping, and I'd like you to talk a little bit about that. And at the same time, you moved from a 100% private-owned entity to a public listing, successful public listing, a little over a year ago, or just about a year ago. I'd just like you to talk in a little bit more detail about those developments and how you see the company's progress going forward.
Yeah, thank you, Ted. Well, we indeed do pursue an industrial shipping model as we have defined it for ourselves, and what that means is that we want to position ourselves as a service provider to the broader energy space as a competent marine operator capable of undertaking sophisticated marine services and thereby proving our relevance to our energy customers. Over time, we've diversified the scope of the services that we perform. And I think going forward, I think we want to have a diversified product offering. And of course, that will continue evolving and changing in line with the evolution of the needs of our core customers. But fundamentally, I think we want to make the business less exposed to the market cyclicality. And therefore, we are deep believers in our model, which presumes that we contract long-term with the end users of our services. And we try to compete in niches in specialist services where we can provide higher value added input to our customers, and therefore justify better marginality for the business. We have transformed from a traditional tanker company, which we were when, well, I started here almost 17 years ago. In the meantime, I think we've over the course of this time, we've more or less quadrupled the size of the business, but more importantly, we've qualitatively changed it, with over 50% of our asset base and over 50% of our revenue base coming from industrial businesses that are totally immune from the volatility of the spot tanker markets. And these are specialist services in supporting offshore upstream projects or transportation of liquefied gas, specifically LNG, where again, all our investments are backed by long-term employment contracts. That does not mean that we've withdrawn from the tanker trades. Again, I think we still operate a sizable tanker fleet, both on the crude and the product side. Over the years, we've optimized its positioning and the structure of the fleet to best meet our clients' needs. And for as long as Russia, one of our core markets, remains a major producer and exporter of hydrocarbons, I think again, we believe that we will have business to do. And of course, we will see ourselves as the seaborne extension of the online pipeline network to bring the products to the markets around the globe.
Thank you. I note from your investor presentation materials that, and you just mentioned 50% of the business today is really within the industrial, what you describe as the industrial shipping sectors that you cover. But the target, I believe, by 2025 is to make that 70%, so that the mix would really be 70% industrial and 30% conventional. Is that a situation you see continuing to grow in favor of the industrial business, or is that more of a balance that you think is appropriate given the business potential that you see?
Yeah, I think again, we first of all, we're well on track to achieve this target. I mean, that has been set by our board, and I think we are more or less achieving it already with the contracted capex that we have as of today. The reason why the industrial side is growing disproportionately is that, one, as you correctly say, there is good business potential, and we have a healthy pipeline of new projects and new business. But secondly, because it's a much easier investment proposition for us to act on, I think all our investments are backed by longer-term employment contracts, and therefore we are not investing on market expectations. Mm-hmm. I think, as many others, we tried before to second guess the direction of the markets, and we hardly get it right, more than we get it wrong. And so, rather than speculating with our shareholders' money, we thought that we'd rather compete with the scope and quality of our services and invest on winning contractual business and deploy capital for the use by our clients to complement the expertise that we're providing to operate this equipment. So I think that's the model. And to answer the second part of your earlier question, we are still in a very capital intensive business. We need continuous access to capital. And until last year, we were constrained with 100% ownership by the Russian Federation to only support our growth with debt capital or whatever proceeds we had left after payment of dividends. Now we have access to equity capital. So we have this instrument, and obviously we see the benefit of expanding its use going forward.
Okay. ICE class vessels and operating expertise and experience are big differentiators in your industrial business. And I'm wondering if you see potential for growth in that business outside of your home market.
Well, we have a global footprint, and obviously by the nature of our industry, shipping is exterritorial, is very international, very global. I think if you look at our major customers, these are all international, national energy companies, and we want to have a diversified mix of customers going forward. So I think we will pursue growth in the geographies where our customers are pursuing their growth. As I already mentioned, I mean, our home base, Russia, will continue to be a major producer and exporter of hydrocarbons, and we see good growth potential here. To date, we are present in servicing each and every upstream project along the Russian coast. I mean, in the subarctic and the Arctic areas, and so yes, obviously yes, this is one of our core competences. Obviously, navigating up higher in the Arctic is, in some instances, we're almost uniquely qualified to do so. And I think we can well apply these skills and the qualifications of our seafarers to meet the needs and requirements of our customers. And I think we also have to bear in mind that when we're talking about geographies, we're thinking in terms of projects. And as we well know, all the big projects around the world, the upstream projects, they're being developed by big international consortia where our clients pull together their resources and their competences and create joint ventures to develop these projects. So in Russia, outside of Russia, our skill sets are relevant to the same core customers. Sakhalin 1 is operated by ExxonMobil. Sakhalin 2 was developed by Royal Dutch Shell. Up in the Russian Arctic, you have Novatek of Russia partnering with French Total, with Chinese companies, CNPC, CNOC, Japanese, Mitsubishi. So I think we do not differentiate them on a nationality basis, but rather we want to make sure that we are there to support them wherever they see their growth area going forward. For now, obviously, the Russian Arctic is definitely a growth area on the natural gas, on the LNG side.
Yeah, I mean, looking at the projections of the growth in Russian LNG liquefaction capacity, you know, between now and the end of this decade, it's quite a stunning development. I believe the numbers were something like 37 million tons today, and going up to 135, you know, by the end of the decade. 27 in 2020, up to 139 by the end of the decade. I mean, that's a dramatic growth. Is that primarily for export markets then? That additional capacity, Nikolai?
Well, even if half of that projected growth materializes, that's great news for us, because it so happens that yes, Russia 1 is sitting on 20% of the world's gas reserves, and there's good potential to monetize that reserve base. I think obviously all the mega projects that are being under development currently are up north. I think you remember the previous phase when you had all the big projects in Northwest Australia. I think the growth has moved up north to the Russian Arctic, where we had Yamal LNG project started a few years back, and the next even bigger LNG project, so-called Arctic LNG 2 project, with an annual production of around 20 million tons of LNG per annum, targeted to go into production in 2023. So these are multi-billion mega projects, and yes, we are well positioned to provide services to these projects, and we definitely see this as a potential growth area for us. And the good thing about these projects is that they happen to be located far away from the markets, and there's no other way to bring the product to the markets other than by sea. So there's a very natural role for us as a ship operator to play in servicing the flows of these cargoes, and they will be huge.
Yeah, thank you. Sovcomflot had a capital markets day recently, I think just last week. I don't know if that was your first one since you've become public, but I wonder if you could just cover kind of some of the key takeaways there in terms of the company's financial strategy, how you look at the balance sheet, and what have you.
Yes, thank you, Ted. It was indeed our first capital markets day. I mean, we held it on the first anniversary of our IPO. The company listed on the Moscow Exchange exactly 1 year ago, and listed its shares on the Moscow Exchange. And we thought that it was timely to give our new investors an opportunity to meet the broader management team, rather than just talking to the CFO and occasionally the CEO, and to give them a more comprehensive overview of the business, our strategy, our operational platform, our commercial initiatives, and yes, indeed, our financial policy. I think we are on track, as I mentioned, in pursuing our strategic growth. I think the target is to bring up the industrial part of the business to account for 70% of the revenue base by 2025. To maintain good marginality of the overall business with EBITDA margins at or above 60%. Earlier this year, we regained our investment-grade credit ratings from all three international rating agencies, so we're BBB- rated by all three, which is good news. And on the back of that, we did a partial refinancing of our outstanding Eurobond with 23 maturities, and pushed out the maturities to 2028. We're able to lower the coupon, and so just demonstrating uninterrupted access to unsecured debt from the debt capital markets. So yes, as part of that, obviously we need to commit to maintaining some credit metrics at an appropriate level. So I think our current net debt to EBITDA stands at 3.5 times. I think that's probably the level where we want to keep it. But otherwise, I think we are fine. I think the cushion of industrial business allows us now to comfortably sustain whatever situation we're faced with on the tanker side of the business. We have a backlog of future contracted revenues of $25 billion. So I don't think you'll find another marine service or oil service company with a backlog of this size. And what's even better is that year on year, for the forthcoming years, we already have around $1 billion of contracted revenues. So this again is sufficient for us to meet our operating needs and service our debt, and on top of that, to have free cash available for dividend distributions and expansion capex. So I think we still plan to grow. I think we have capacity to invest about $500 million in gross capex year on year, and so the task is to continue to source and identify attractive projects to invest in.
Very good.
Yeah, also maybe worth mentioning that on the back of this capital markets day, we had two of the analysts lifting the target price on our shares. So I think the market has reacted very positively to the overview we provided.
Talk a little bit about the efforts the company is making on the decarbonization side, Nikolai, if you would, please.
Yeah. Well, look, you know that Sovcomflot is a well-established brand. We spell out SCF as safety comes first, which is a registered brand driver. And so we don't hide our name and identity. We have it spelled in capital letters on the superstructures of each and every of our vessels. And of course, we have been and continue to be fully compliant with all the rules and regulations. And to begin with, as we all know, we are operating in a heavily regulated industry. What I'm trying to say is that we don't need to do any lip service and window dressing, I mean, to the decarbonization topic or the ESG topic, which is quite fashionable these days. Because yes, we are in the business of dealing with hazardous cargoes. So safety obviously is something that is well embedded in the DNA of the company. It's in the company culture. I mean, it's not something that you can nurture overnight. I mean, you have to grow it. And likewise, I mean, we obviously want to leave the planet in a better state after we're gone. So yes, I mean, again, we will be compliant with all the regulations on the decarbonization side. You remember that we were among the first to introduce LNG as a primary marine fuel for the larger size tankers, and we had our pilot project and pioneering projects, which we pursued in partnership with Royal Dutch Shell to build a series of ice-class LNG-powered Aframax tankers, which were first of the kind. So I think what we try to do is we try to be at least a half a step or one step ahead of competition, ahead of the industry, and I think do what we believe is right and good. And LNG is obviously a much cleaner fossil fuel. I think it's now well accepted as a transitionally fossil fuel. Before, I think the engine manufacturers, the shipbuilders come up with technology to switch to non-fossil fuel. And until such time, I think all our new buildings, I mean, I think with the exception of two shuttle tankers, they will be running on LNG. I mean, I think today 17% of our fleet operates on LNG. So I think it is as clean as you get in today's realities. I mean, so LNG fuel reduces carbon emissions by about 30% compared to other compliant fuels. I mean, it eliminates sulfur emissions. So I think we don't need to pretend that we're doing something on the decarbonization front, because we're actually doing something daily, and then we're obviously monitoring the development of the regulations and preparing ourselves for the regulatory framework that will be in place and kickstart from 2023 and onwards.
Yeah. Yeah. We've got, it looks like 2 minutes left, Nikolai. So maybe one more question, and I guess I'll go back to the conventional crude tanker shipping. And I think what I heard and what you projected is this, continues to be strategic for the company. It will remain a significant, meaningful part of the business. You have a very strong strategic position within the market. The tanker market's been suffering. What are your thoughts about a recovery there, and how do you see that?
Well, I think as I'm sure my colleagues will have already commented, the supply side is very manageable. The order book is currently across all tanker vessel types is at historic lows. I mean, and we do not anticipate any new orders because, I mean, all the slots have been taken up by container ships or bulkers. And for the foreseeable 2 or more years, I don't think we will see additions to the global tanker fleet, and in the meantime, we'll see a natural attrition of the aging vessels. I think what we're waiting for is the post-pandemic recovery on the demand side, because we're very much dependent and on the health of the global economy and on the consumption of energy. I think at the moment we have not yet seen the demand for seaborne transportation of hydrocarbons to recover to pre-pandemic levels. I think we're still waiting for that to happen. And of course, that means that air travel needs to resume. I mean, borders need to reopen. I mean, people need to go back to the offices and start driving and using their cars. So I think this will be gradually happening. And I think, yes, there were expectations that we'll see that happening in 2021. I think now, we're realistic that this is a 2022 target. But the fundamentals are still very much favorable. And as I say, we are different, so we're not overly dependent. We're not overly exposed to the tanker cycle. On the opposite, I think we see it as an upside option to our investors, on top of the industrial revenues that we already have in the pocket.
Great. I think we've reached the end of our time, Nikolai. I really I want to thank you. Very much appreciate you sharing your comments with us today. Sovcomflot, in my opinion, has an extremely unique position in the market, and obviously a very robust financial position. I think the company has a very promising future ahead. Wish you all the best of luck, and thank you.
Thank you, Ted. Thank you for your questions, and a pleasure to be at this conference. Thank you, everybody.
Well, thank you from my side. I will only echo what Ted said. Thank you very much, Nikolai, for sharing your insight on your unique company. Thank you so much.
Thank you, Nicholas.
Thank you.